Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to comment, like, and watch the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, well, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, investing at a minimum of every 2 weeks into the portfolio whenever I get paid, but I also do large chunks. Actually, I'll probably do a large one coming up here in March sometime whenever I get my bonus, and buy a significant amount there whenever I do that. I cover all my investments on into the portfolio on this channel. I do not have a paid Patreon account. We all have enough to pay for. So nothing here, you don't have to go to some other page site or pay for a Patreon to see what I'm doing. It's all out in the open, and that's what this video here is about. It's a portfolio update. You'll get to see what dividends were paid out this week, what positions I added to that are already in the portfolio. If I bought any new positions, I did not this week, but some weeks I do. And for those of you who don't have a brokerage account, I do have a Webull link down below. If you use that, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. You don't have to use that at all. I also use Ally Financials, where I do my main investing out of. That's my main brokerage account, but I do some on Webull as well. I don't really cover anything that I do on Webull. It's more speculative in nature, more in the line with the growth stocks, small cap stocks. But we will be covering this week's portfolio update. As you can see here, we added $1,444 to the portfolio. So let's jump right into the video here. First, we will cover any dividends paid out for the week. So we did have some dividends paid out on February 1st, the first day of a new month. Always nice to see that passive income come in. We had $157.02 paid out in total, and it's broken up between two companies. Verizon, ticker VZ, out of the communication sector, paid out $98.57, which we have the drip set on. So for those of you who may not know, what that basically means is anytime a position within the portfolio pays out, it goes right back in and buys more shares of that company. So here, as you can see, Verizon paid out that $98.57, and it automatically goes back in and buys 2.36732 shares at $41.63. That's auto set, so whatever the market is that day when they pay out the dividends, that's what it'll buy it at. And then the next company to pay out dividends this week was AT&T, ticker T, also out of the communication sector. Paid out $58.45, and same thing, it went right back in, bought more shares of T, 2.86106 shares. So those new shares, right, this is part of that snowball effect. Now the portfolio is buying more shares of the positions within the portfolio, a significant amount here, 2.3 and 2.8 respectively, and then those new shares add an additional $9.38 in passive income, right? Next up, we will get to the first new buy here. We added on January 31st, the last day of January, we did do one small purchase, and then the rest was in the first week of February here. But on the last day there, the 31st of January, we added 2 shares of Johnson & Johnson, ticker J&J, out of the healthcare sector. We picked up those shares at $162.13. My cost basis is about $165. It was $166. This pulled it down a little bit. So I'm looking for anything under that, and I would like to continue to build this out. I've got about 56 or 58 shares of this. I'd like to get to 100 shares, then I'll probably back off. So on January 31st, we had $324.26, bought 2 shares of Johnson & Johnson, and that added $9.04 in future passive income, right, paid out over the next year. And we weren't done. On February 3rd, we went back in and we added another $1,120.73. And with those funds, we picked up 14 shares of Sibanye-Stillwater, ticker SBSW. This is a mining company out of the industrial sector. We picked up those 14 shares at $10.44. We picked up 10 shares of Leggett & Platt, ticker LEG, out of the consumer discretionary sector. We picked up those 10 shares at $37.30. And Leggett & Platt, consumer discretionary, I think I said that. And we picked up 10 shares of Ally Financial, ticker ALLY. This is out of the financial sector. This one has run up significantly, actually, and it's hard for me to add to it right now, but my cost basis is low enough where I probably can add another maybe 10, 15 shares. I'm actually hoping that it pulls back a little bit under this 30, even back down to 30 or high 29, $28 there. But as long as it stays under 35, I'll add. If it gets much over 35, I'm probably going to back off adding to this one. I've got 85 shares now. I'd like to get it over 100, but again, if it continues to run up, I'll probably pause on this one for a little bit and wait for it to come back down. And last up, on February 3rd, we added 20 shares of Medical Properties Trust, ticker MPW, at $12.75. Another one that had run up significantly, but finally dropped back below 13. And I think it had touched 14 there for a while. And I was buying it here back in the low 10s. My cost basis is still under 11, but it snuck up there a little bit. So this is another one that I'm hoping pulls back or stays in the 12 range where I can add a little bit more. Much over $12. It gets back into the 13 range. Same thing. I'll probably just back off and wait a little bit. And these new positions here, the 20 shares of MPW, 10 shares of Ally, 10 shares of LEG, and 14 shares of SBSW, added $67.36 in additional passive income over the next year. So total invested was $1,444.99. Total passive income added to the portfolio with the positions here, with the positions we saw in the previous slide that we added new capital, as well as the dividends paid out there in Verizon, in AT&T, added additional $85.78 in passive income, right? So that's nice whenever your annual income goes up by $85 in a week, and it's pretty much averaging about $80 to $85 a week right now. I mean, who would not like a raise every week for $85? That's basically what this amounts to. And then a quick run through the overall total value of the portfolio sits at $119,121.33. The dividend yield is down a little bit, 4.911. Still very nice yield in my opinion. Anything over 3% is very nice yield in my opinion. And this is what it's all about. The passive income provided by the portfolio paid out in the form of dividends from the positions in the portfolio. Don't have to do anything but buy good companies and then hold them for the long term. This will continue to grow as I add new capital and as, like we saw with AT&T and Verizon, as the positions in the portfolio pay out additional dividends, that will add to this snowball, and that snowball keeps getting bigger and bigger and grows faster and faster over time. Obviously, the more you add to the portfolio, the better, and then it's just about time. Think of it as, I explained it to a buddy of mine the other day. I said, think of it as, I don't know, a lot of you might be from the south, but up here in the north where we get snow, think of it as when you were a kid and you took a small snowball at the top of the hill and you wanted to build a snowman. You roll that snowball down the hill, and then you go up to the top and roll it down there. Well, the hill is timed, right? So the longer the hill is, the bigger that snowball will get, right? So the longer you invest and the longer you let this reinvest and grow, the bigger that snowball will get. So time is your friend. This is the one instance in your life where time is actually your friend. Over time, this will grow faster and faster. And when I'm 70, 80, 90 years old, I'll be obviously bringing in the tens of thousands of dollars in this portfolio. And that is really what it's about. It's one day being able to retire and live financially free, where the dividends paid out from the portfolio pay for all your bills. All right, so we'll run through a quick sector weight update. Communications is sitting at 9.42%. Consumer discretionary is sitting at 8.75%. Consumer staples is sitting at 5.39%. Energy sitting at 7.96%. Financials sitting at 16.08%. Healthcare is sitting at 7.74%. Industrials 4.27%. Technology is sitting at 13.24%. Materials is sitting at 13.13%. Utilities, still no utilities. REITs and real estate sitting at 14.01%. And no ETFs. I consider my portfolio its own ETF. I have generated my own ETF, so to speak. I don't have to pay any fees. Not to say that I'm against ETFs. If you really want a hands-off passive approach, ETFs would be the way to go. And it's better than not investing. If you don't want to take the time to research stocks, to look at the financials, to look at the fundamentals of the company, to figure out a valuation for the company, and then wait and buy it whenever it's at fair value or below value, I would just dollar cost average, right? Every week, every month, every 6 months, 3 months, whatever you want to invest, whatever that timeline looks like, and dollar cost average into low cost ETFs. A VOOO, SCHD, VYM. There's several out there, but that beats not investing at all. So index fund and ETFs at a minimum is what you should be doing to take control of your financial future. Well, I appreciate you stopping by. Really, that is it for this video. Just wanted to go through what activity I had in my portfolio for this week. Go ahead and drop a comment down below. Let me know what activity you had in your portfolio for the week. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, right? Ring the notification bell. Most importantly, subscribe to the channel. It really does help me out. I really do appreciate all of you people out there who've taken the time to subscribe. The channel continues to grow because of people like you. Drop a comment down below. Let me know what you think of the videos. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, hope you had a great weekend, and thank you for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel from a certified financial advisor.